In this video, I'm going to do a stock analysis on Castor Maritime, or ticker symbol CTRM. There's a lot of momentum behind the stock right now, and I think it's possible that we can see 500% growth in the upcoming months. So I'm going to do a quick summary of the company and then tell you guys about the recent news, financials, go through my technical analysis and tell you guys where to look for entries and exits, and then I'm going to talk about the momentum that's driving up this stock, and finally give you guys my price targets for both short-term and long-term investors. Before I talk about that, I want to mention that in my last week's video, I talked about Ceragon Networks, and since then, the stock has taken off over 29% in just 4 trading days. So if you guys want to make sure that you don't miss out on these moves, be sure to subscribe and hit the notification bell. That being said, let's get right into today's video. Castor Maritime is a shipping company that specializes in dry bulk shipments. The company's vessels are doing primarily short to medium term charters and transports a range of dry bulk cargoes, including commodities like coal, grain, and other materials along worldwide shipping routes. With Biden's clean energy agenda, it is expected to see a reformation of transportation emission guidelines. CTRM operates 6 dry bulk carriers, which are among the lowest carbon emitting vessels available for maritime transport. So it is likely that CTRM will benefit from any environmental policy changes Biden may have. The maritime shipping industry lost 4.1% due to COVID last year. However, it is expected to bounce back 4.5% this year as the world economic output recovers. Also, CTRM has been gaining a lot of exposure recently. They are one of the talked about stocks on the Wall Street Bets subreddit. As more people become aware of this stock and YouTube videos like this one are being made, it's going to draw a lot more traders and investors to the company. A catalyst in 2021 is not just an earnings release or a press release. It can be a YouTube video that gets hundreds of thousands of views, or it can even be a group of Redditors online who are talking about a stock. When investing, it's definitely worth taking a look at the momentum behind the stock. And CTRM has been gaining a lot of momentum, as we can see on Google Trends, StockTwits, Reddit, and YouTube. Now on the chart of Castor Maritime, we can see that on the 4-hour time frame, we had this big jump up on the 27th and 28th. This was related to the Wall Street Bets subreddit, and this move really shows you the power of momentum, which I think is rising really quickly with this stock. Going down to the 30-minute time frame, we can see that there was a bullish flag being formed, and this past week we broke out and then retested support and continued our move up. If you happen to be day trading this stock, we have a resistance created at 79 cents and a wick on the left, and as we know, wicks tend to be filled in momentum. So I would be looking for a breakout of this level to retest the highs made at 89 cents, which is about a 15% gain. If you're a longer term investor, I think buying this breakout is a good spot to add positions, because if we break out now, we might not be coming back down to these levels anytime soon. They have been taking delivery of new carriers, and since this summer they have tripled the amount of vessels that they have in their fleet. And most recently, on February 3rd, they added another vessel to their fleet, so they now have 9 vessels under their operation. Back on December 30th, they received a 180-day extension from NASDAQ to meet the minimum bid price rule. This was because they were not able to hold for 10 business days the $1 minimum price point per share. Now this would be a potential red flag for the company. However, they are holding the $1 price point, and on January 22nd, they announced a $15.3 million debt financing plan, which is going to continue to support the company's growth plans. Now I'm going to take a look into their financials, and then I'll get into my price targets. We can see that they have a year-over-year quarterly revenue growth rate of 124% and a gross profit of $2.95 million. They are holding $37 million in cash, which will be used to purchase more vessels and expand the company further. The company has 508 million shares outstanding and a short float percentage of 7.1%. Before the coronavirus hit, we were sitting around $4 per share. The maritime industry did lose 4% last year, but it's expected to rebound this year. Their earnings are positive and their revenue is growing, and they have $37 million of cash on hand to purchase new vessels to further grow the company. These ships are dry bulk carriers, which are among the lowest carbon emitting vessels available, which is going to benefit them as Biden makes environmental policy changes. The technicals look great, and we're just beginning the start of a breakout, and with the momentum that's coming from Reddit and the more exposure this stock is getting on YouTube, I think the price will continue higher for the time being. I can see this stock going back up to the pre-coronavirus levels at $4 per share. This might happen over the course of a few years, but it can also happen in a week with this current momentum that we're seeing. So if you're looking to get into this stock, I would definitely be watching that 78 cents level for a breakout. But because these stocks are volatile, I don't put more than 2% of my money into any individual penny stock, and I like to keep a diverse portfolio, and I recommend that you guys do the same. If you enjoyed the video, please consider subscribing. It really helps motivate me to keep making these videos and shows me your support. If you have any questions, please feel free to let me know in the comments below. And with that being said, I'll see you guys next time.